Buddy. Good afternoon, everybody. Hope everybody got through their Monday intact. Alright, should be up on the YouTube and the virtual trading floor, so let's do it. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer, and a member of FINRA-SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Here is my position disclosure. Why did I just go dark? There it is. Here's my position disclosure. Let's see what changed. I got into and out of Roku. I don't think I had Roku over the weekend. I think I got out of it on Friday. Got back into it today and then sold it into the up move. I got back into TQQQ short today. I did keep a small amount of that. We talk about that game plan. And I know I said that I wasn't going to really resell puts for this week like I have the last couple of weeks. They've done very well, though, and with the market pullback last week, it actually made me more inclined to sell puts again just for some of that premium in some of these names. I did get assigned 2 of those positions that I had still on Friday. One was my Reddit 65 puts, which is fine because the stock opened up at 67, so I sold those pretty quickly this morning. And then the first one I've actually taken a loss on was this pen. I had 1950 puts that got assigned. I sold them at 1880 during the day today. So I think that's the first one of these positions I've had where I've been selling puts that I've actually taken a loss on. So pretty good track record so far. I like it right now for some of these names that have based or that are small caps or mid caps or IWM related, because I think that they can keep a little bit of a floor on them, especially after the pullback we had the second half of last week. So we'll see. Big options guy now. I said that joking. It's definitely a small part of what I've been doing, but it's been fun to be involved in options a little bit and learn more about them through experience instead of more of the theoretical knowledge, because I was never really an options trader at all, just always an equity guy, and I'm still primarily an equity guy. All right, so let's jump in. Let's talk about the market. So how did we close today? The S&P closed up 1%. The Qs closed up 1.4, and the IWM outperformed by the end of the day, being up 1.6%. I think it's significant because the IWM was relatively weak pre-market. It was relatively weak in the beginning of the day. And then once we cleared that 218 intraday, which as we were getting up to that 218, I said, watch this 218. If we break out here, maybe we can get some legs. And that's exactly what happened. We broke out through that 218 intraday, got some legs, closed above 220, caught up to the Qs in terms of percentage performance today. And then at the end of the day, by the close, the IWM ended up outperforming the NASDAQ. So I think that's a pretty significant snapback. And did we just get hit here a little bit after hours? No, just a little bit. Not really. So yeah, that's pretty good performance today though across the board. To be honest, everything was a winner. S&P, NASDAQ, IWM, all up by similar amounts, though the way they got there was a little bit different. So let's hop in and take a look at these daily chart technicals. So we had a little bit of a sell-off starting Wednesday of last week, a 3-day sell-off here. And the question is, will this 3-day sell-off just lead to the next bigger picture higher low for this S&P? Or will it lead to something more from a selling perspective? Hard to say at the moment. After today, it looks very possible that this could just be another higher low for the S&P. As we know, it seems like the S&P always seems to benefit from the rotation, especially when the rotation is Q relative strength, just because it's market cap weighted. But even in an event where the Qs are relatively weak and sell down a little bit, the S&P has the capacity to hold in if money is being rotated elsewhere. And while I do think we saw a little bit of a pickup in correlation with how the market was trading at the end of last week, carrying through today, especially with the VIX being a little bit higher, the dispersion trade seems to just enable the S&P to hold in and never have these really big up or down days. Never. I don't think we've had a single 2% down day in the S&P like this whole year, or if we've had, they've been very few. So the S&P continues to be very insulated, and the question is this a pivot low on Friday that leads to a new high, or is this a pivot low on Friday that leads to a lower high, a failure to make a new high that then creates a break of the trend? The better thing to always assume, I've learned, is that the trend is your friend, and you should assume that that trend will continue until it's literally proven to you with the definition of a trend break, where we go from higher highs and higher lows to lower highs and lower lows. Until you actually see that happen, assume that the uptrend will continue. Obviously, we've got a lot of macro and micro events upcoming that could change that, and I've personally become a little bit more biased towards us seeing some seasonal weakness perhaps coming in August as we go into this election cycle, but that's more theory than technically confirmed, and the technical confirmation is always going to be the most important thing. So SPYs for the most part are looking pretty good after today's snapback. The Qs are, I think, a little bit more mixed still. So obviously the Qs kind of led that sell-off last week. The semiconductors led that sell-off last week. Like we discussed, if money needs to come out of the market, well, where is all the money? All the money's in Apple, all the money's in NVIDIA, all of it's in the Mag 7. So if cash needs to be raised, or if there's August outflows in the market, which is probable just based on history, the Qs will probably take the brunt of that. So I have a little bit of a short bias here for the Qs over the course of these next several months. That's just become my thought process. Obviously, you want, again, technical confirmation of any sort of thought process that's like that. We do, for the moment, appear to have that technical confirmation. But even if you are, bearish and the market then becomes extremely extended, it means that you don't necessarily want to be short in the same way, or you could even look to the long side for a Q trade. Same thing is true on the opposite side. If you're bullish and the Qs or SPYs get to $10 plus worth of extension away from the 80 MA on the daily chart, you can still be bullish, but you need to recognize that technically the market needs a break, and you want to pair out of those longs a little bit, potentially put on some cute shorts. So that's kind of been the name of the game, and primarily that's been happening on the upside because the Qs have been just so bullish and leading the market higher. Mag 7, Mag 3 has been leading the market higher, and it's made sense just to go with that trend until we hit that extreme extension and then come in on the other side. We did that a little bit here with the Qs back in mid-July, leading to this pullback here on July 11th, and then we got a little bit of a character change here starting Wednesday of last week when we broke down further. We lost that first 490 support. We haven't lost that more major support yet, which I think is like 475 in the Qs. We held that pretty perfectly actually on Friday. But it hit a point here where you can be bearish on the Qs, and again, I've become increasingly bearish on the Qs, but not want to be short anymore or even look for longs just because the extension was getting extreme. And that's kind of where we were at last week. I remember, Thursday in particular, I started my day by shorting the gap up in the Qs, but at certain points throughout the day I was covering the short and flipping long because at lows we were hitting that heavy degree of extension. And then on Friday, I kind of want to be short the Qs, but I'm not shorting the Qs when they're trading at 474 with the 80 MA at 486. It's a bad risk reward. Then today we get the gap up, we get that snapback, and I say to myself, okay, as we approach this equilibrium zone, the space between the 8 and 21 EMA, which is actually pretty much the same price right now in the Qs because they're crossing, that's the area where you're not extended anymore, and I can put my short view into the market if the technicals are confirming it by starting to build back into the short. So that was kind of the game plan for today. When we had this gap up was, hey, I can look at, shorting the Qs into the low to mid 480s. So I started very small via TQQQ at about 482. I built in as we moved higher. I covered some as we went lower. The trade worked pretty good in a small way. And at the same time, we were going long the IWM at lows. So that was kind of the big question with this gap up. We discussed in the morning meeting today that the trying to find the right words, the healing process that the market needed after this huge multi-day reversion trade where the IWM caught that big bid and the Qs, broke and sold down. The Qs are $10 extended to the downside. The IWM's $10 extended to the upside. That trade needed time to kind of heal and to reset up. So that's why, even though I'm bullish on the IWM, that's why I'm shorting the IWM on the 16th, the 17th, and then covering that by, a little bit of a shallow target, 218 on the downside, and then, taking some Q trades to the long side in the IWM on Friday, and then again taking some trades to the IWM long again today. We needed to be patient on the IWM trade. The biggest thing that I called for in the morning meeting today was that the gap was causing us to be patient, or causing, I think, a need to be patient. Because while I am looking for the pivot low in the IWM, and potentially that pivot low could have been from Friday's low, I didn't want to chase this opening gap. And while at the same time I want to be short the Qs, I really want to make sure that I've got that full snapback into equilibrium. I don't want to short the Qs too early, and I don't want to buy the IWM too late, I guess was kind of the point of the meeting this morning. Turn my camera on the YouTube. So that was kind of the plan. I wasn't shorting the Qs at 480. I was shorting the Qs at 482 and above. I wasn't buying the IWM at 218.50. We were buying the IWM at 216 and below. That was more of the signal. When we were breaking yesterday's low, but also getting a lot of downside extension on the small time frame, that was the cue to kind of begin to be willing to build into the IWM. And this is how trades work on multiple time frames. This is what we're looking for. We're looking for multiple time frame confirmation. I'm looking for, on the big picture, the IWM to create the pivot low and to snap back. But on the small picture, my execution is coming from the downside extension on the 5-minute chart that I have here by 10 a.m. At 10 a.m. I've got this IWM trading at 215.50 with the ADMA at 216.70. So over $1 of extension in the IWM, and that is after, it's like 4 or 5 red bars in a row here, where you can look for that 5-minute time frame RDR trade to the long side, which the real target for that, and this is the way that I've been trading it on just the 5-minute chart, is just a quick snap back to these moving averages. But what we also discussed is that, again, multiple time frame continuity, is that the big picture chart is telling you shouldn't just get out of your entire position by the ADMA on the 5-minute, which is what I was doing, by the way, with the QQQ 5-minute chart longs on like Thursday of last week. Was, hey, these are just counter trend trades. The Qs are breaking down on the daily chart, so all I want to do is take a quick snapback trade off of extension and try to put a few dollars in my pocket. That worked really well even as the Qs were selling off last week. This trade's a little bit different. You could take the trade in the exact same way, where you just look for the snapback to the IWM, close out your position, make a few bucks for yourself and move on. Or you can say to yourself, hey, I'm going to hold 20, 25, maybe even more than that, maybe even as high as 50% of my position, just to see if this snapback on the 5-minute chart can actually become a bigger picture move to the upside on the IWM based on what the daily chart is saying. So for myself personally, I bought the IWM. I know a bunch of us did. I did it via TNA, which I think a bunch of us did, into this down move. For me, I have so much exposure to the IWM and to this rotation trade already via the other positions that I have, that I didn't actually want to hold this for the bigger move. So for me, I just took it as kind of the quick snapback trade. I was all out by the ADMA on the 5-minute chart, put that few dollars in my pocket. But at the same time, as I was liquidating the position, I was explaining, hey, the only reason I'm liquidating this position is because I have so much exposure to the IWM via my other positions that it just doesn't make sense. It's not responsible for me to look to take on a whole additional swing trade to the long side with the IWM specifically, given the other names that are in my portfolio. But if you don't have that type of concentration that I have, it makes sense that you shouldn't get all out of your trade here at the ADMA like I'm doing. You should hold some for the bigger move. And I was really glad to see that not only did we nail that execution of that trade, but that a whole bunch of you guys then held the position, not just to make a quick, dollar on a 5-minute chart, or even less than that on a 5-minute chart, but to actually capture an entire $5 move. And I literally said it at the time. I was like, this is a trade right here where you could just make this 80 cents or whatever, or you could keep some, and don't be surprised if you see the IWM very quickly in the next day or two in the low 220s or even mid 220s, and next thing you know, you got in this IWM, you were trading it with, maybe 50 cents risk or even less as we were kind of building into this trade, and next thing you know, that can be a $6 to $10 upside move for you, which then becomes obviously a really good risk reward, and then you see what it does from there. And now when you pop back over to the daily chart seems to now be showing us exactly that. We had this, it turned out to not be Friday's low. We pierced through Friday's low, which I was actually thankful for, because the gap up this morning wasn't really giving us the IWM entry that I wanted to. The patience that we called for in the morning meeting, combined with the pullback that we had off the open, the breaking of Friday's low, the extension on the 5-minute chart, actually then set up perfectly to give you like this RDR style trade on day 4, really as a trend continuation trade, not a counter trend trade, to potentially create the pivot low in the IWM after this pullback for that trend continuation. So I think it was just a great job this morning as far as the game plan that we had, the fact that we called for patience at the open, but then actually got our executions with the QQQ short that I know Josh is involved in. He just said he covered some here after hours. The IWM long that Tate, I think, was the first person to say, hey, the Russell here is hitting this spot where I think that we can start to buy it. And it was just great teamwork and great communication, I think, from an index level perspective to kind of nail the trading there. So that's a great job. Hope you guys are able to do well with it. From an individual stock perspective, I didn't really trade any of the game planning ideas this morning that we had pre-market, which were looking for this XBI to pivot, which actually looks like it worked out okay, and looking for First Solar to see if it could work its way higher and break the trend, which it definitely failed on that, or looking for Sunrun for bullfly continuation. That trade definitely also failed. I wasn't really involved in any of those. Mainly just kind of stuck with, I'm very focused really on the macro, even as we're coming into earnings season here, which is a great opportunity to be involved in more micro individual stocks, based on earnings reports and in play. I'm very focused on just positioning myself around this SPY versus QQQ versus IWM trade and rotation that's going on right now, because I think that there's a lot of money to potentially be made by executing that trade properly. So managing my swings, trading the indexes. Mentioned I got into and then back out of Roku today for a cute little trade. Traded the serve again a little bit today. I did not hold for the big move, but just stuck with my game plan. Got a great short on, and then I fully covered that short by $13, and then it continued its way all the way down to $8.50. I know Dennis was asking me, hey, how come you're all out at 13? This thing looks like it could roll over, and I didn't disagree with you. It was just going back to the way that I traded this thing on Friday, and Friday serve was my entire day. I traded so much of this thing on Friday and did really, really well with it on both sides. It was actually in our note to look to go long this thing versus the $4 area. That worked out really well. And then there were also a lot of great shorts in the afternoon on this. The only time I got myself in trouble a little bit, but then it still worked out, with serve was when I changed the game plan on the short to, instead of just look for the quick counter trend snapback trades on the way up, which I did really well with, to actually look for the reversal to come in. And I tried that here at 1 o'clock, and it failed. That was so, and then I actually caught it here. But based on that experience, I was like, I had a specific edge that was working for me very, very well, where I would start to layer in the shorts into the broader extension in serve and then be all out by the ADMA, and I was continuously making money on the short side after liquidating the long, and I kind of just wanted to stick with that same game plan. So I literally just shorted like 1450 through, I think my best sale was 1350 through 1386, and then was out of the whole short by $13, made a few bucks and was out of the way. So that was like kind of the one thing I think I did more on the individual stock side. But yeah, still really kind of macro focused on this market. Loving how this market's trading right now. I think it's still making great price action. I think we've been having a really good read on it recently, and let's just take advantage of it while we've got that read on things. That's all that I've got. I am happy to answer any questions that anybody has. First and only thing I'm seeing in the VTF for the moment is from Dennis, which sounds like it's asked and answered, but let me just read your question anyway. The IWM bounced today. You said you had enough exposure to it with individuals, but let's see what it can do type of trade. It seemed like such a decent idea off the ADMA. I got a bit of regret myself taking the size off too fast. Do you see any mistake there to not let that trade breathe and for you to keep at least 20% or so? Yeah, well, like I said, so, asked and answered, I think, on this one. I'm a stickler for my game plans, and I think it would be kind of irresponsible for me just because of the degree of exposure that I already have to also add on a big, fat new IWM position. So for me, I want to stick with my game plan. I'm happy with what I did. For you, you should assess if your game plan was appropriate for the trade. I remember us chatting, and it sounded like, and this is part of it too, Dennis, which maybe makes it a good idea, is it sounded to me like when you were typing into the chat at this morning when you were even taking that IWM trade, you're like, hey, I'm in the IWM long trade, but I feel like I don't have a good feel on the market today, so I'm just going to take this as a quick scalp and get out of the way. I think that's fine. If you don't feel like you're super in tune with the market, that means that you should be extra cautious on the trades and executions that you do. So if that's kind of where your head was at that time, and you just wanted to take it as a quicker trade, then by all means, it's fine. And it's exactly what we preach that you should do, as a matter of fact, when you don't feel like you're properly in tune with the market for whatever reason. For me personally, recently, ever since this market broke out a week ago Thursday, I've actually been feeling the opposite. I've been feeling like I've been super on point. I've been trading really well. I feel like I'm vibing with this market. I've just got great feel for how it's moving. So, for me personally, it's a trade that I would actually want to be more greedy on if it wasn't for the fact that, I've already got all this other long exposure. So, yeah, appreciate the question, Dennis, and even though I kind of answered it in the main portion of the meeting, it still, I think, was worth it to kind of re-review a little bit. Anybody else has anything in the VTF, feel free to post. Otherwise, I'll pop over to the YouTube. So from the YouTube, from Uvixi Bull, have you ever thought about just selling a call against those shares instead of heading out? I don't know what you mean by heading out. By selling out, maybe. So yeah, and I've gone through this in other meetings as well. I have. So I have sold calls on some of the swing positions that I have. I've run into a couple problems doing that. So one is, interestingly enough, even though a lot of what I've been doing. So first of all, let me just repeat. I think with options, I'm still relatively amateur, but I actually have very good overall P&L in my like surprisingly good overall P&L in my options trading so far, but still consider myself to be a lot more amateur there than I am on the equity side. But that's the beauty about this business, right? We continue to learn and grow and become better traders over time. So I have sold covered calls on some of my long swings in the past. One problem that I ran into, and I guess I subconsciously typed up JD because I remember it was specifically with JD, was I sold covered calls at a strike price where it traded above the strike price, so it could have gotten called away from me, but then by the end of the expiration was back below the strike price, so I ended up keeping the premium. But the premium that I collected was less than I would have made had I traded the position per my normal game plan. Because of the way that I trade with the cash flow style of trading that I've spent a lot of time talking about in some of these afternoon meetings, I would have made more by implementing my normal game plan, but then I couldn't sell some of the position because it would have gotten me naked on the calls, but I also didn't want to get out of the calls to go back to it. So it just was like not a good situation where I actually made less than I would have made otherwise, even keeping the full premium on selling the out of the money covered call. So that was one thing that I didn't like. And then the other thing is, even though I've mainly been doing some, like a lot of these weeklies, I'm doing them with a little bit more of a macro view. So I don't want to sell covered calls right now on the positions that I have, because the positions that I have are more biased towards the IWM rotation trade. So I don't want to be taking those. If we have like a huge upside macro move and we're extended, that's when I'd be more interested in potentially selling those covered calls for a period of time when I think that the market needs corrective price action. So for now, if I was going to sell calls and anything, I probably would want to do it on Mag 7 because I don't have the bull view there. But I'm not going to sell them naked. I don't have positions on them, and it's right in front of earnings, so I'm not going to do any of that. Whereas if I can continue to take an advantage of selling puts in names that I think are going to benefit from the rotation trade that already have bases, that's actually been working really, really well for me these last few weeks, handful of weeks, whatever it's been now that I've been doing it. Where, like I said before, I thus far have managed to make money on every single one of those positions that I put on except for one, which is Penn last week, and the net P&L that's come to me has been really, really good. So that's kind of the trade that I've been doing there. Again, even though it's weeklies, they're a little more, I think, macro focused in some ways, that are just giving me an extra bang for my buck while I'm taking advantage of this base and looking for the IWM to move higher. And I'm primarily doing it in names where I'm not upset if I get the stock, to be honest, from most of those prices, which I think is also important. So if that answers your question, I see Bill here is excited from Cyril. We saw some consistent buying today in the Qs. What's your thoughts on if the Qs can go higher, specifically thinking about NVIDIA, which had a good pullback, and the buyer stepped in again? Sure, so kind of already answered that one as well, just with my portion of the meeting. I'm still a bit more macro bearish on the Qs, to be honest, until and unless they prove themselves. And they haven't proven themselves. This is still just a snapback from downside extension. We haven't even gotten to the ADMA on the daily chart. So this is what markets do. This is how they behave. It's like I was saying, even if you're bearish on the Qs, and I'm increasingly bearish on the Qs, you don't want to be short the Qs on Friday. They need to bounce back. And that actually could, if you are bearish, give you the reset up for the short, which is exactly what I'm looking for the moment, and that's why I started to short very small as the Qs got above 482. I want to do that, when the Qs are a couple dollars away from the ADMA, not when they're $12 away from the ADMA on the short side. Can the Qs give continuation of the upside? They absolutely can. I could be completely wrong. But this is what's more broken right now, technically, on an index level than anything else. The Qs are more broken than the SPYs. The SPYs aren't broken at all. The IWM is not broken at all. As a matter of fact, the IWM just broke out. And the Qs aren't fully broken. Let's be fair to QQQ bulls. They're not fully broken. I think that if you get a lower high in this bounce and then a break of 475, then the Qs are actually really breaking. A lot of that's probably going to be impacted by mega cap earnings. So we'll see how that goes. You should never, in my experience trading, you should never count out Apple and Microsoft on their earnings reports. They've got a million and one levers that they can pull to keep their stock moving higher or enable their stock to hold in. Should never count them out. But I've already explained, I think, in a lot of afternoon meetings and other places now about why my thought process has turned more bearish on Mag 7 into this earnings season than any earnings we've had in, this entire year, or even most of last year. So we'll see. But I'm looking to see if we get a lower high that comes in, unless an incredible earnings report just ruins that and the Qs just go back to 10 trillion bajillion dollars. From Apex Joy, I heard you mention in this morning's interview that Tesla's recent behaviors more like Dow Jones and small cap cyclical stocks. So what's your view on Apple? So Apple and Tesla, I think, are very different. Tesla is an expensive growth stock that has to grow into the expense that the stock is trading at. I don't know what Apple's forward PE is at the price that it's trading at right now, but I'm quite confident that it's not as high as Tesla's. So it's a very different stock. I mentioned in this morning's morning meeting, in some ways, Apple's the one that I'm most bullish on. If you listened to that interview that I did with Greta today, which it sounds like you did, I talked a little bit about the AI bear case. The AI bear case is basically that some of these companies, particularly Google, Microsoft, Meta, are spending so much money on AI that they're not going to be able to recoup that reasonably in new revenue in the near future. Distant future, your guess is as good as mine. But if those companies can't show that they can recoup it in the near future, if they can't show in these upcoming earnings reports that they're expecting a whole ton of revenue growth to come from AI through 2024 and 2025, I think that becomes a problem for those companies. But you know what it's not a problem for? It's not a problem for Apple. Apple's not spending boatloads and boatloads of money on AI. They're letting Google and Microsoft do it, and they're saying, hey, we'll just benefit by implementing what you guys develop in a way that's probably better than you guys can implement it, just because we've got, better tech. And, if it leads to everyone needs the latest Apple iPhone because the latest Apple iPhone is the one that's giving you access to Microsoft's and Google's AI, Apple wins. And if it's a situation where Apple's overblown, it doesn't turn into the revenue like we're talking about, well, Apple didn't spend all this money on AI development, so they're also going to be in a better situation. I think it's actually genius. So I'm definitely a big picture bull still on Apple. How can you? It's so hard to fight that buyback. That buyback is just incredible. Even with that said, though, look at this move. Look at this move. And I know that there were some events here that took place, some news events that boosted the stock, but Apple at the last earnings report, Apple had a sick earnings report, and it went from 173 to 183. Well, now we're just at 235, or just 225 now. So there's a lot of expectations built in even for Apple for this earnings report. So I think that's just the difficulty of it. I'm a big picture bull in Apple, absolutely, but in the very short run, as you come into this earnings report better be fantastic. Or I just think it's difficult for these stocks to move higher. I think it's very difficult for these stocks to move higher, these Mag 7 names, with the exception of maybe Tesla, on like an inline earnings report. But again, that's all my speculation. We got to see as the reports actually hit. From Kevin G, the Qs have a major level at 478, dating back to June 25th. $478, $475 is the level that I've been looking at based on the pivot low that's from June 24th. Was the beginning of the uptrend from 7-1. I'm not sure I fully understand the question, if it is a question or maybe it's just a comment. I mean, the Qs have been an uptrend since the October 2022 bear market low, basically, if you're big picture about it. But yeah, I do think that the level that we held on Friday for QQQ, this 474, 475, is a really important area. And if you get a lower high and then lose that, you got problems. I might be, Joy. I definitely might be. What platform am I using? The trading software that I'm on is Lightspeed, but my platform that I trade through is through T3 Trading Group. So I'm a professional prop trader, T3 Trading Group, and Lightspeed is one of several trading software options that we offer to prop traders at the company. If you're interested in learning more about prop trading at T3 Trading Group, email info@t3trading.com, info@t3trading.com, or you can email me personally, first initial last name, doldensmith@t3trading.com, doldensmith@t3trading.com. From Kevin, do you think with a positive earnings we could see Amazon move up, especially with Bezos selling, giving people a chance to buy? Do I think that Amazon can move higher if it has a good earnings report? Yeah, of course. But, again, I'm still of the same thought process, really, with all these Mag 7 stocks. I actually like Amazon and Google a lot. A little bit concerned, again, about AI spend, but I actually like Amazon and Google a lot. I don't think that they've gotten too far ahead of themselves in the same way as some of the other ones have. But I also think that an inline report for these companies is not going to be enough, and I think that it's worth noting that Jeff is still selling. I've been saying it ever since we found out that Jeff has to sell, what is it, 25 million shares? Is that what the number was? Was it 25 million shares? I don't remember. $25 million worth of shares? Somebody's got to remind me. All I know is it's a really, really big number. It's more money than I'll probably ever have. But I want him off the offer to buy, and at this point I want to get through the earnings season. I want to get through these earnings reports. Yeah, I don't dislike Amazon, and I know it hasn't performed. A lot of these other Mag 7 stocks are up a huge amount, and I don't think Amazon's up nearly to the same degree. Apple is 34x. Is that a forward earnings multiple? But yeah, that sounds right. I think Apple in the low 30s actually sounds right. From Rubble, at what price for Apple and Microsoft would you consider them oversold going into their earnings? It's a good question. I think if you show me Apple back at like where it was just trading at the end of June, that 210, 208, 214 zone, something like that, then maybe we've actually pulled back deep enough into the report where what I'm saying no longer applies. So I think that's a really good question. But at that point, you got to pull back an Apple from 237 to 210, let's say, into the report. Then maybe you're in a situation where you see an inline report or a small beat where it can perform better than otherwise. And it should be noted that we are off highs now coming into those reports. False print Microsoft just scared me a little bit. Yeah, Microsoft's had a pretty big pullback. 470 down to 435. I don't know. I want to get through I want to see what Microsoft looks like after the report, to be honest, at this point. Gotcha. That's a good job, Robo. It's definitely a good job. All right. Anybody else have any other questions for today's After Hours wrap-up? Okay. We'll end it there then. Have a fantastic evening, everybody. I hope you guys all had a good trading day. I think it was a good trading day as long as you're a little bit patient at the open. So have a wonderful night. See you tomorrow.